Hi, and welcome to the 29th episode of Startup Strikes. Today, my guest is Fawzi Itani. He is Palestinian American and also investor at Forerunner Ventures, which is a leading consumer investor. And this episode has a special meaning and a place for me because he's also a fellow Amherst grad, fellow Mammoth, and always nice to connect and talk to fellow alumni. And welcome, Fawzi. Nice to have you on.
Glad to be here. Thanks for having me.
Yeah, as I said, I'm genuinely really excited to make this happen, especially to talk about a very interesting investing space, consumer investing, which is constantly shifting, constantly changing. But before obviously we delve into questions, I always start with the background, and I'm curious about your story, your background, your kind of like the pathway to foreigners, and what drew you to venture capital in the first place, and why consumer space specifically.
Totally. So I started my career off at LinkedIn out of Amherst College. I was doing a rotational program for all things go to market. So sales, recruiting, customer support, sales operations, you name it. And when I was at LinkedIn, I realized that I had a little bit of free time, and my friend and I were really curious about sort of like the broader tech space. And we both realized that we were really into video games. We really wanted to play video games, but we knew nothing about the industry of the video game space. And so him and I just kind of started writing about it. This was in late 2018 that we released our first newsletter to like three of our friends. And over the next 4 years, we built it up into a relatively big audience. So him and I realized that we had a bit of a distribution, partnered up with some other friends, and started a research and consulting firm for the video games space. And naturally, like during the pandemic, video games became a really hot topic. A lot of people were interested in how to build community, how to stay social when we were all distancing from each other. And it just so happened that the venture capital space saw an influx of investment into the video game space. So I'd kind of like segment gaming and entertainment as a small subsector of the larger consumer space. And I was interested in taking more of a broader approach to video games. So, thinking about changing consumer behaviors, thinking about consumer needs and expectations, thinking about like, what are the trends that we should be thinking about that are going to be long lasting and stick with, people like me and you. And that led me to Forerunner Ventures. I saw an awesome portfolio. Also, what attracted me to them was, unlike many of the VC firms that I wanted to interview at, they had a cold application. They weren't taking people from their network. They just said, submit a writing sample, submit your interest to Forerunner, and then we'll take it from there. And that really appealed to me as someone who was coming in from the outside in, who candidly had a sales background. I wasn't coming from a target like investment bank or consulting firm. And yeah, I've been at Forerunner for almost 4 years now. We're a small investment team of 5 or 6 people and a broader team of 15. And we think a lot about like how to collaborate internally, how to service our portfolio companies with a sort of boutique nature. And it's been an awesome ride so far.
That's really nice. And before I move on to my next question, I'm curious about you mentioned your experience at LinkedIn, and you mentioned also your interest and also the work you did with the gaming. Which of those experiences were like the most defining and also the most helpful in your understanding of the venture space and the consumer
Totally.
behavior?
I would say the gaming sector
Mm.
specifically. So this firm that we founded called Navic, I didn't know anything about venture. I just knew that like startups were a thing, that venture capital funded those startups, and that hopefully one day the startups would be pretty big. And my friend one day told me, hey, get on Twitter, which is like kind of a weird recommendation. But when you go on Twitter, you can kind of curate, at least back in the day, curate who you wanted to hear from. And there was this like wealth of information and knowledge, from podcasts and newsletters to people sharing their thoughts to people being open to, sharing their thoughts as well. And that kind of led me down to this small accelerator called Y Combinator. And we realized that Y Combinator had funded a company called The Athletic. So The Athletic compensates journalists really well for writing about sports news and media. And my friend and I thought, okay, we could do this for video games. And through this experience, we applied to Y Combinator, went through the interview process, ultimately got rejected for a variety of great reasons. Just realized that like the space of tech and startups and venture capital was a lot larger than we had initially thought. And the experience of like going through this interview, meeting a bunch of venture capitalists, everybody was offering their time in a very generous way, kind of like ignited this interest of wanting to be in the industry.
That's really cool. And venture capital is one of the like the most dreamy positions, especially at the higher level, at the good level. It's one of the most really interesting jobs out there. You meet great founders, you invest in great companies, and some of those returns can be astronomical, right? But it's also very competitive and demanding field, and there's a strong element of luck involved. I'm curious, as a junior investor, right? What does it take to succeed as a junior investor? And how do you personally approach excelling and evolving in your role, in this role?
It's such a great question. And I'll be the first to say it really differs from firm to firm. Some firms really prioritize sourcing, so other firms prioritize thesis building. And every level that you go through, you might start off as an analyst. I started off as an analyst, associate, senior associate, VP, principal. You kind of unlock a new level of trust. You unlock a new level of understanding in the venture space. A lot of people say that venture is about pattern recognition, going through the reps, doing, cap table math, doing financial models, but also seeing a lot of different companies. In that way, it's kind of like a sales job, right? You want to prioritize quality over quantity in many ways, but the top of funnel really matters. Your inputs lead to your outputs, as they say. I kind of live and die by this phrase. We're both Amherst College alums, right? So this David Foster Wallace quote says, in this modern world, to survive, you must be unborable. And unborable, if you take the opposite or different way of explaining the word, it's just always have a sense of curiosity. If you don't have a sense of curiosity, you won't ever be excited by the companies you're meeting. You'll never be excited by the spaces you should be looking at. And it's really those creativity and connections that lead you to new and novel ideas, to meeting new people who might be starting companies, or software engineers who might be interested in joining the best companies. And I think, venture can be a roller coaster most of the time. You manage your emotions. Sometimes you meet really great founders, and sometimes the founder isn't a fit for your venture fund. And so through those experiences, I kind of like have maintained a sense of curiosity that lets me manage those emotions of, going through the venture capital job, the sales job, the service job.
That's really interesting. And you've been in the space for some time now, right? And I have two kind of like related questions, and take in the order you want to answer them. It's up to you. One is, you're always exposed to so many different ideas, so many different companies and founders. How do you manage to keep up with so many like changes and so many like new things, right, happening, and also like not just keep up with them, but also like understand them well enough to invest in them? And my second question was like, as I think you mentioned, you've been in the space for 4 years now. What are some things that you've learned that kind of like surprised you, or maybe just some lessons that you really like learned and they stayed with you, stuck with you?
Oh, both are such good questions. Let me try to tackle both at the same time. So for venture capital, like a lot of it is just thinking about new, exciting spaces that you want to be a part of. Most of the time, you're kind of led down a dead end. And the 1% of the time that you get really excited about something, it might lead to an opportunity. And so the ways we kind of think about it are like, what is the market risk? What is the execution risk? What is the technology risk? And what's the team risk, right? So there's a couple of things that we have to de-risk for ourselves to invest. Forerunner invests at the early stage. So maybe you weight market and maybe you weight team much more heavily than the other two, because those are the determinants for maybe raising a Series A or raising a Series B down the line. And we want to set up our companies for success there. How I've navigated it to date has been thinking very deeply about spaces I spend a lot of time in. So I'll give you an example, healthcare. Just so happens that healthcare is one of the biggest consumer sectors. Trillions of dollars are spent. It's a broken and fragmented system. And there's a lot of opportunity to sort of like revitalize the system. And one of the areas that I got excited by during the sort of GLP-1 craze, which we're still in, has been nutrition, weight management, obesity. But essentially, like, how do you get people to change their lifestyles and diets in the right way? And, you start to canvas the opportunity set. There's the companies that help you eat better. There's the companies that give you supplements. And then there's the companies that, might service the dietitian. And around that time, we had started thinking about this idea that, maybe we should help solopreneurs start and run and manage their own businesses. This was a big thesis effort that Forerunner went through called digitally native franchises. Essentially, how do you build a brand and help people work under that brand? So I got really excited about the dietitian space. Like, how do you help dietitians make more money? How do you help them credential and accept insurance? And it turns out there was just 3 companies doing this at the time, maybe 4. And one of them really caught our attention because his mom was a dietitian. There was like some really great founder market fit. They had a 1099 model instead of a W-2 model, which essentially means you're not employing the dietitian full time, you're employing them as a contractor. And therefore, you're giving them the flexibility to pursue the work that they wanted. And over time, as we had canvassed this space and started having conversations, we got really excited about this one company. We started running after it and doing everything we could to, win that deal and show that Forerunner could be a great partner. That deal today is Fay Nutrition. They're crushing it. They grew 5x year over year this past year. And I think it really just starts with like a thesis effort. Forerunner's DNA is in writing theses and exploring ideas that maybe other people haven't really thought about, and trying to be a little more forward thinking in how we approach our investments. Sometimes, just to close out this thought, sometimes you have to be proactive and sometimes you have to be reactionary. I think we like to lean proactive because there's so many great opportunities and founders in the market. So it's really a balance of both.
Got it. You're saying so many things. It makes me come up with new questions, and I'm forgetting to follow the questions I have here.
No worries.
One thing you mentioned about the thesis stuff, right? And I've talked to some VCs. Some of them are like, you shouldn't have a thesis, and some of them are like, you should develop your thesis and be specific about it. What's your thoughts on that?
Forerunner started, 13, 14 years ago with the thesis that direct-to-consumer would be a really important channel. Our founder and managing partner, Kirsten, went around New York and San Francisco, meeting all these great founders who were leveraging an ad channel called Facebook that had never been leveraged before. So when you think about like kind of this arbitrage opportunity of a cheap way of getting in front of consumers, essentially a distribution hack, Forerunner was founded upon a thesis that consumer would be a growing and important channel for most people. There's the marketplace network effects that a lot of people talk about, and we've invested in those types of businesses like Fair. We've also invested in very direct to consumer channels like Chime that have innovated on the fintech front. So, a lot of it is like your network and how you get access to those networks. But really the best deals come from seeing the future clearly, but seeing the present even more clearly, what's going on that can impact the future. And that's why we talk a lot about changing consumer behaviors, because, you might have seen Stanley Cups burn in a car and like survive that car crash or whatever. But you can also look at the nutrition space and say, I think people are really going to care about their nutrition today and they're going to care about it tomorrow. So we should invest in this thesis.
Got it. As it brings a really nice segue to my question here, which is Forerunner itself, right? I mean, some of the companies that come to my mind are like, as you mentioned, Chime, Glossier, Hims and Hers. I think you guys invest in Aura Ring too, if I'm not mistaken.
Yeah, that's right.
So you guys really, have a reputation for backing these transformative companies that became kind of like household names, right? Can you share you already kind of touched upon them briefly, but like, can you share what makes your investment process so unique compared to other players in the space? And what factors, obviously, if certain things are confidential, you don't have to talk about them, but what's some of the factors that you prioritize when evaluating opportunities?
So Forerunner, I've only ever worked at one venture firm, so I can't really tell you what other people do.
Fair.
But what I can tell you special about Forerunner is that we're a much smaller team as a percentage of our AUM, which is fairly unique in the industry. We're very boutique. We move fast. We're nimble. I think that separates us from a lot of other teams, because if someone has conviction, you just kind of tag someone in and you work really hard and fast to build that relationship. Ideally, we've built that relationship over many years, and the founder is someone we know that we want to work with from way before. We do a lot of our investments that way. I'd say like the collaborative nature of Forerunner gives us a unique edge, because when we invest as a team, really it is as a team. You're not investing as one partner. You're not investing as one, senior associate. You're investing as Forerunner. And so when we make a bet, you're kind of having everybody around us, hop in. In terms of like what we look for, I think I talked about the risks earlier, but it's mostly about the team. I came into venture thinking, through my research background, market, being at the this catalyst of change, the beginning of those was the most important factor, and it is a important factor. But over 4 years, you kind of just understand that like making a bet on a team or making a investment on someone or people who are special and who have a unique insight into the market, who have a tie in some shape or form to the market that they want to service, is the most important factor. And why is that? Because ultimately, they're going to stick around for a really long time to solve this problem. They're going to move really fast because they care about it. And they're going to hire the best people because they're so charismatic about the product or platform that they're building that everybody just wants to come and work for them.
Got it. Yeah, I mean, we already mentioned a couple of companies, and your favorite, I think you said the
Fay Nutrition, yeah.
Fay Nutrition, exactly. But can you give me some more examples from your portfolio, and what stood out in those companies when you guys decided to invest in?
Totally. So we're investors in another company called The Feed that I work pretty closely with. And The Feed is a retailer for sports nutrition, drinks, electrolytes, you name it. What was really cool about getting to know The Feed initially was not understanding that triathletes, marathon runners, cyclists are people who really cared about what they ate, how we call it fuel themselves and get the energy they need over not just a race, but a months-long, years-long training process. And it just so happened that the people who buy these electrolytes or, sports nutrition goods, they resembled subscription-like tendencies without necessarily needing a subscription. So, when we looked at the data, there were whales spending thousands and thousands of dollars because the lifetime of an athlete is over hopefully a decades long career. And these people were just spending so much. They weren't subscribing, but they kind of were subscribing. And it was an interesting market where a lot of people during the pandemic were thinking about endurance as, a solo sport that they could participate in. Now with the rise of run clubs, it's become a little more social. But there was just some interesting market changes alongside like a traditional retail model where, even the moat that we saw there was like most of these brands didn't actually want to sell on Amazon. They wanted to sell on a purpose-built retailer that could like directly connect them with the customers that they wanted to. And it just also turned out that a lot of these brands weren't available in the US, and The Feed was making them available in the US. The last thing I'll mention about this company, and not to like continue talking about it, but hopefully it gives you a sense of our thought process, was the CEO, Matt, used to run a Tour de France team. He used to manage it and kind of develop the idea, just being like, give you the short story, develop the idea through his experience managing and running a pro cycling team. And so that really gave us confidence in him as a leader.
Yeah, I mean, it feels like every piece just falls into the place.
Yeah, sometimes you just find the perfect team and
mix of
company.
things, right?
Right, and I'll be the first to mention, we're a generalist consumer fund. A lot of companies fall under our mandate, and a lot don't. And so a lot of the work that we do at Forerunner is thinking about the spaces and categories that matter to us, and ruling out the spaces and categories that maybe don't have a there, a why now at this time, or don't have any relevance to us at all. And that's the beauty of also having a big investor network, is you can share deal flow, you might know that your friend at this fund wants to do this type of deal. And so you forward it over to them. Maybe they return the favor at some point. That's the fun part about this job too.
That's so interesting. And I actually have a question about this, really, finding, kind of keeping an eye on consumer trends. But before I move into that, um, there are a lot of VC firms in the space. There's a lot of capital available and a lot of VC funds out there. And I feel like, earlier on, like really earlier on, there were like only very few VC funds. There were a lot of like ideas there. And, there was, essentially you weren't competing for good companies, good ideas. But these days, I feel like there are a lot of VC funds and they're competing for a limited number of like really good deals. And I'm just curious, what does it take to build an edge as an investor, as a VC firm? I mean, feel free to interpret and answer it in a way you deem it fit, but just curious your opinion, really.
I'll be honest, like I'm still finding my edge. Don't know what it is, but I'm sort of trying to make some headway into understanding what my edge is. And so it's a good question, right? Like I'll tell you what I'm thinking about. The first is like my network, right? I'm Arab American, I'm Muslim. And so one thing I've done a lot of is connect with these communities because they matter to me, and hopefully they can have someone in the venture landscape matter to them at some point. So I always say, like, if you're an Arab or you're Muslim building in consumer, you should come to Forerunner and just like at least have a conversation. That's an example of a small edge. The second is, we think a lot about our brand as Forerunner. We're a top consumer brand. We've invested in a lot of consumer companies. Hopefully our track record speaks for itself. And so when we think about edge, it's not as just as an individual, it's as a team. We show up as Forerunner and we show up as the consumer brand. And then lastly, like a lot of edge is this thesis building, right? It's about seeing things, hopefully that are, people say contrarian, right? But like the idea around contrarian is, how do you get there early? How do you build the right relationship? What are you seeing that other people aren't seeing? And what do you have conviction in? And these are all forms of edge that are a little more qualitative, but are a little bit more, a little harder in nuance to like determine.
Got it. There's so much I can learn from you, really. I feel like it's continuing talking.
Hopefully.
One thing, I am not, obviously I'm not an investor, so I don't really know much about consumer investing or really the consumer space. And as I said, it's such a vast and creative area, but it's also constantly shifting. So you have to really be in tune with the changes, with what's happening. I'm curious, what are some key trends and consumer behaviors that you're keeping a close eye on right now? And how does these trends influence Forerunner's investment strategy?
Okay. So without revealing too much, I'll give you a few things that we're looking at. No, I'm just messing with you. On our website, we talk a lot about like this idea of the messy creative space that we're in with AI and ML and all the consumer experiences that will come of it. You can think of this as more personalized, curated types of platforms or products. We call this access to edit, or maybe nested under that like search to service. How do things, instead of like you being overwhelmed by all the amount of products or services that are available to you, how are those brought to you in a very like tasteful and curated way? So that's one thing that we talk a lot about. Another area that we have been exploring, and I think a lot of venture firms and companies are thinking about this space, is this idea that consumers want to take more a proactive approach to their health. How do you think about longevity or preventative healthcare? How do you like quote unquote demedicalize the system if there's a little more distrust, like arming consumers with the information that they need to take advantage of their health, to understand their health in a more pointed way. So in this regard, like one area that I've been thinking a lot about is continuous hormone monitoring. When we think about our investment in Aura, for example, we saw something in sleep and managing that and diagnosing it and providing solutions. And so when we think about other areas of data collection that might be important for this like broader preventative healthcare theme that we're exploring, could hormone monitoring be something that is important and valuable?
Got it. You mentioned a lot about thesis, and you already mentioned a couple of and how like the consumer trends are influencing your investment strategy too. But just a bit more specific about the thesis areas that you're really passionate or excited about. Are there any examples you can share with us?
Like thesis areas?
Yes.
When we raised our new fund, we said, so maybe just to backtrack a little bit, Forerunner recently announced its seventh flagship fund, a $500 million fund. And when we wrote that like announcement article, we like sectored it out into like consumer finance, consumer health, business models like marketplaces, and then like other areas that are going to be important to the consumer. I think my like takeaway from that is just that over the next 2-3 years, as we deploy this new fund, we're going to be diving deep into these areas, like what opportunities exist and are available. And one of the strategies that we're pursuing as a firm is building out a research team.
Mhm.
So as we think about like the investor investment team role, for us, it's not just about like finding and sourcing and winning companies. It's also about identifying the opportunities in the companies really early. And so the research team function is going to support that broader investment team area. And one way that we do this is we do a lot of consumer surveys to gather this quantitative like grassroots data from people like me and you on what they care about. It's not just about sourcing Reddit and saying like, okay, people care about
Yeah.
longevity. It's
Yeah.
also about going to the consumer directly and saying, what do you care about in longevity? And like, how are you doing this today? And what about tomorrow will change? And
Yeah.
so, not necessarily thinking about specific thesis areas, but more about how we're going to find those like really interesting opportunities within the sectors that we care about.
Got it. I don't want to ask a very cliche question, but I still want to, and feel free to answer it or not answer it really. Um, AI is the same, right? And I'm sure AI is affecting the consumer space too in some shape or form. And sometimes I feel like AI is also the buzzwords that founders use to, raise funding because it's the hype now, right?
Totally.
How do you, in your opinion, how is it shaping or affecting the consumer space, the developments in AI? And when you think of the AI in the consumer space, how do you separate hype from something like real, from something that actually matters?
Yeah, all great questions. I was talking to a really smart investor recently who said, I was talking to him about the infrastructure layer of AI, which is something that we got really excited about at Forerunner. How do you support the next generation of consumer experiences? Think the analog of like Stripe to fintech or Plaid to, consumer fintech experiences. And, he said the smart thing where he said the light bulb came before the electricity grid. Right. And so like his analogy was the app layer comes before the infrastructure traditionally. There might be some like exceptions to that. And what we get really excited about is this app layer, like what are the next generation of consumer experiences that are leveraging AI? Turns out this is already happening. Almost every company in our portfolio is leveraging AI to some extent. It could be customer support, it could be chat GPT just to like write an email. It could also be like, to the Fade Nutrition example, like how do we help dietitians do their job better and more efficiently in a more cost effective way to save them time? And so every single company we talk to today has some AI or ML component to it. There are more native AI experiences that we're looking at and evaluating. I think the future of those is unclear. And so we're really excited to take like, leap of faith investment bets on great teams. And I think that's what separates the good from the bad. Just returning to this idea that great teams with founder market fit with some experience in this space are going to be the ones that end up winning out. And then backing the bold and visionary and creative ideas that, might seem a little wacky today, but in the future might actually turn out to be something that we all use.
Got it. I really want to ask a clarification, just not just for our audience, but for myself too, because we always hear about product market fit. But you mentioned a lot of founder market fit. Can you elaborate on that a bit?
Yeah, founder market fit is just this idea that the founder really resonates with the product or platform that they're building, that they have, ties to it to some degree. I think that's hard to find in a nascent, evolving field. but there is always inklings, right? And what we want to avoid in venture is this idea of like AI tourism, right? That people are coming to your product or to a space just because they have they want to be part of it, and that's great. But we want to back teams and products that are going to have consumers and teams who want to stick in it with the long term. And I think that's like also something that we regularly evaluate is, what does retention engagement look like? How do you get people in? What does distribution look like at the end of the day?
Well, Fawzi, it's been a very informative episode for me personally, and hopefully for the audience. Again, thank you so much for your time. We are at the end of our episode, but before we go, I want to ask a question because a lot of people that watch this episodes are usually young or aspiring entrepreneurs or aspiring VC investors, and somebody who's been in the VC space and consumer space for a while, um, and kind of like I had a kind of a more non-traditional way of breaking into the space. I'm curious, what advice would you give to those aspiring, how they should approach kind of like building skill sets, building themselves, and be ready for the space if they want to work in this space?
I might have a different take than most when it comes to aspiring people in VC or venture, which is that you can join VC at any point in your career. It is always going to be available so long as you follow your nose, your gut, your passions, and your interests. The skills at VC are pretty table stakes. At the early stage, it might be more of a sales-led job. At the late stage, there's much more of a financial component. So there's always a way to learn the skills. I would just say talk to as many entrepreneurs as possible. Research as many interesting markets as you want. Go join a startup that is just growing so quickly that there's no way that you aren't going to succeed and that you're going to learn so much from the team. There was somebody who wrote this recently and it really resonated with me that VC is about giving. It's you have to replenish the well sometimes is I think the phrase that they use. So my biggest advice is just like go find a way to fill your well as much as possible and then come back to VC and be ready to have people take water out of your well. Because that's what the job is. It's about servicing people.
That's a wonderful metaphor. Fawzi, again, thank you so much for your time. Thank you so much
This
for a
has
great
been
episode.
wonderful. Thanks for having me on.